Good morning, everyone, and welcome to yet another session on technical analysis for profits. I am Raja Venkatraman out here, and I'm glad to have you all on this bright Saturday morning. So, a lot of enthusiastic technical analysts out here, some budding, some wanting to know more about candlesticks, some already familiar with the subject but wanting to fresh up. All of them are welcome. And let me give you a brief premise on what is technical analysis for profits. Technical analysis for profits is an initiative by Growth Avenues, a very novel and a new one which we have started this year, where we focus on giving you an idea of the basic concepts of this subject, which sometimes gets forgotten during your trading and investing journey. We all want to make profits. We all want to participate in the market. But who does the hard work? That's what we try to emphasize through our webinars, the free ones and the paid ones. Everywhere we ensure that we emphasize the value of doing hard work, we emphasize the value of doing technical analysis, we emphasize how powerful this subject is through our various webinars. Some of you have already attended our webinars earlier, and some of you are wanting to know how good is our webinar. Well, today I'll give you a glimpse of how we progress, what you're seeing out here. Before I proceed further, can you all give me a heads up on the audio and the video so that we can proceed? There have been some few queries asking when will the program start. The actual timing of the program is from 11, as you have all been informed. The earlier login period is opened up. The window is opened up so that you don't have any issues with the technical setup. Okay, we're good to go. So we all know something about technicals. Maybe some people are already familiar with technicals. This program will be taken on the basis of people who are not familiar at all with technical analysis to people who are familiar with the subject. Okay, we all know technical analysis is a method of evaluating securities, be it your commodities, be it your currencies, be it your stock futures or stock indices. Everything is analyzed in the uniform way, and this uniform manner is done with the help of charts. But before understanding that, let us understand that technical analysis has basically three assumptions with which it proceeds to giving us its readings. The first is it says that market discounts everything, which in short says that market is God. So whatever market is trying to tell us, we should accept it verbatim. Two, prices have phases, that is, they move in trends. So whenever there is a trended action, we should participate with the trend. And the third is that history tends to repeat itself. And these three features in combination is captured on the charts. We all have emotions, isn't it? Some of us cry, some of us laugh, some of us react in a certain way. And all these reactions are captured by the chart. So chart basically is a graphical representation of series of prices which are set over a period of time, so that it gives you a perspective of what the future is going to say. Technical analysis deals with probability and not with certainty. So one should always be aware that you are analyzing a probable time frame, you are analyzing a probable result, and it is not a conclusive one. So why are we all gathered here? We have gathered here to understand about candlesticks. And before I proceed directly into the candlestick charts or what is candlesticks, I would like to give a brief idea about the company. This is mainly done to ensure that people who are attending our webinars for the first time get an idea of how solid this company is. It's not a one-man company. It is having 7 analysts. It is having a team of people to take care of the marketing. So you're dealing with a solid organization which is founded by Dr. Narayan. Dr. Narayan is a highly acclaimed pioneer in the subject of technical analysis. He has received the Lifetime Achievement Award by ATMA, which is the Association of Technical Market Analysts, which is the largest body of technical analysts in India today, and it's growing. Growth Avenues is founded over his 37 years of experience, which is a wealth in today's market. And this wealth Dr. Narayan shares through programs like these, where we come to you with a basic understanding of technical analysis and share with you how you can tweak your understanding, how you can tweak your trading style and capture market movements. The main aim of Growth Avenues and the main services are advisory services to private HNI and individuals, and Growth Avenues also renders advisory services to corporate houses across asset classes. Then we are also into the training sphere, where we certify traders, relationship managers, and enable them to deal with their clients in a much better manner. Then for those who are dedicated like you all in the trading sphere, we have trader mentoring programs where Dr. Narayan enables your understanding to a much higher level, and it's a personal one-on-one with Dr. Narayan where he'll be able to coach you into being a very professional trader. And for those who do not wish to take any advice, or those who do not wish to get trained but are definitely having money where you want to invest in the market and take and cash the naye achhe din which is going to be around the corner, we all welcome such funds also. Discretionary fund management is part of Growth Avenues, where Dr. Narayan personally manages with his proprietary methods and analysis, where he guides the funds and invests it in suitable asset classes. So this is what Growth Avenues does under the guidance of Dr. Narayan, and I welcome you all once again. Okay, what are we going to cover today? We are going to cover what is the genesis of candlesticks, how did it all come about. Then I'll introduce you to the father of candlestick charting. Then we will understand the basic concept of candlesticks. How is it formed? Why is it so relevant? And why even a novice today opens up a candlestick chart. Then we'll discuss on how to read the candlestick chart. Then we'll also tell you how is it different from other candlestick chart patterns, other chart patterns. Then we have our own proprietary which we share. That's what I was trying to tell you, that Growth Avenues ensures that there is complete value addition to the subscriber, or even a free attendee like you all are going to get value at the end of the day, because Dr. Narayan is a believer that whoever associates with Growth Avenues should get value at the end of the day. So we will share with you the grades of candlestick chart pattern so that it becomes easier for you to understand the candlestick chart pattern. Then we'll share with you popular candlestick chart pattern so that you are able to interpret the price movement, and along with that we will also show you some examples. So it's going to be a wide bouquet of introspection into this subject, and I would like you all to participate by asking questions alongside. If it's relevant at that point in time, I will answer it then. Otherwise, I will take it up at the end of the session. All right? Okay. Candlesticks is not any recent invention. It is a type of chart patterns which has been developed way back in the 18th century. It has been developed by a Japanese rice trader, because rice trading was the most singular and active work and profession which was carried out in the 18th century in Japan. And that's where they decided to find out how to spot opportunities and how to understand the market movement. So that's when the rice trader Muniza Homa invented this unique concept. It was in hiding, or it was not known to the Western world, because very few people actually ventured into the mainlands of Japan to actually find out what exactly is happening there. Because at that time, Japan was involved in a lot of war, so the trader employed a lot of wartime terminologies, which you will see in some time. Why I am referring that they employ wartime terminologies to indicate a certain type of chart setup. So, who actually brought this unique concept and unique and fascinating concept to the Western world? It's none other than Steve Nissen. Some of you have heard his name. Some of you may even have read his book many times over. But he is a person responsible for getting it into the US markets, where it was relatively unknown. It entered the commodity space and soon permeated all types of asset classes. His book, Japanese Candlestick Charting Techniques, published in 1991, was a huge revelation, and it helped everyone understand how is how does one read a chart in a different manner. So what exactly do you mean by reading a chart in a different manner? That's what we'll see in the forthcoming slides. Primarily today, there are mainly three types of charts. One is a line chart, which is plotted by joining all the closing prices, while the other is a bar chart, which is based on four data points: open, high, low, and close. But here you only know where the price has opened and where it has closed. Apart from that, you do not know much. However, the other form of charting, which is the most popular charting which we are discussing today, is Candlesticks chart, and you can see here immediately how the truth of the current trend jumps out. You can see here I am shifting back and forth just for your understanding. You can see here how vividly you are able to spot the trend. You are able to see the green ones are the bullish candles, and the red ones are the negative candles, which is the bearish candles. So candlestick charts became popular because one could easily see the candle color and decide on what exactly is happening in this chart as of that point in time. If this is a daily chart, then your conclusion will be based on EOD. If it's an hourly chart, it will be based at the end of that particular hour. However, at every point in time, you will be able to decide and interpret the market sentiment. And that's why candlestick charting is hugely popular. Okay, so let's get an idea of how a candlestick is constructed. It has a body. The body is covering the data points between the close and the open. So it's covered in a rectangular fashion. And the size of this rectangle keeps varying. And along with this, you have something called an upper shadow or a lower shadow, which indicates the high and the low. So any line joining the high and the low forms a shadow, and the central part is called the body of the candle. Since this is a green candle, the open is at the lower end and the close is at the higher end. So this is as far a bullish candle is concerned. Now you have a bearish candle. The bearish candle, everything else remains the same except the open is at the upper end and the close is at the lower end. Is this clear? Any queries regarding this construct of candlesticks? Because it is very critical to understand what is happening. You obviously have the color, which is the additional feature of candlesticks. Apart from that, you have this concept also, which has been built in, which lends color to the candlestick. Great. How to read the candlestick chart? See here, whenever there is a red closing, you know that the prices are trading in the negative zone. So once prices start moving below the red candle, it is a time to short. You can see here, a short opportunity emerged here, and the prices traded much lower. Then you have a blue candle here. The prices are consolidating. You have the shadows which are emerging at this level. The prices have stopped declining. The decline began from here, mind you, and the decline continued all the way till this zone. And here the prices are actually stabilizing. The sellers are withdrawing. That's why you have shadows emerging. Once these shadows emerge, you have to start understanding, and a blue candle is also forming, which says that now there is some buying emerging. You can see here, these are large bodies of red candles, but here the body size is becoming much smaller. This is the body size I'm referring to of the red candle. It's becoming much smaller. So that indicates that it is a time for a bullish perspective to emerge, and that's how you can see that prices again are on the way up. So once again I reiterate, these are the shadows or the wick of the candle. This is the body of the candle. So based on the body of the candle, you are able to interpret what's going to happen. If it's a long body candle, then there is more participation. There is more. If it's a long body red candle, then there are more bearish mindset. And if there is a long blue candle, then you can see there is a more bullish mindset, and that's why these shadows are persisting at the lower end. You can see here, these are the shadows which are there at the lower end, which are holding on to the bullish bias. This is how you read a candlestick chart. So why is candlestick quite popular? We saw the line chart, we saw the bar chart, now we saw the candlestick chart also. You can see here that it immediately gives you the demand supply situation. You saw the red candle, you saw the green candle, you are immediately able to ascertain that this is the kind of market sentiment, this is the kind of action which is taking place. So one should immediately act in the intended direction. It uses the same 4 points like the bar chart, which is the open, high, low, close, but gives you a much better perspective. Point number 3, candlesticks is all about reversals. It tells you when a trend is going to reverse, be it an uptrend or a downtrend, or third, an absence of trend. Wherever it may be, candlesticks immediately highlight to you where is the trend going to reverse. And with that awareness, one can immediately take action. It gives you an instant picture of what is the market psychology, so that you will be able to act in the direction which is shown by the charts. Okay, as you are seeing all this, you are able to get a glimpse of how powerful technical analysis is. You saw various kind of charts which I showed you. I showed you how candlesticks is. So I would like to highlight to you a unique and interesting concept which is there with us. This is the usual state of the market, isn't it? It's choppy, it's volatile, and what are we facing currently? The last 2 weeks have been in this manner, isn't it? 2 weeks of volatility, small range bound moves, but we always look to each other to find out what exactly are we doing, where exactly is the market going. However, if you are armed with technical analysis, some of you have already been part of our other webinars, some of you have been part of our CTA webinar courses also. So you'll know how important technical analysis, what the role of technical analysis and how important role it plays. We have a very wide coverage of subjects which are essential for technical analysis, and these are webcasts which are done by Dr. Narayan, and it's a 25-hour video which will not keep you like Simba, which you saw the screen which you saw just now, wondering what is the next action to take. Instead, you will be empowered. Ultimately, that's what we want, right? We want to be empowered to take our own decision. But how many people of you are really empowered to take your own decision? You all need some guidance. So what we are doing is we are giving you the required guidance at right points in time, and such a unique service is not available anywhere in India. We have a time window beginning from this November 1st to December 31st. Let me explain to you how this time window works. This time window is where one will be able to see the webinars for n number of time. They will be able to see it repeatedly and understand the various important concepts which are required in technical analysis, and then get themselves familiar with the subject, because unlike a physical training where the lecturer will be actually commenting on, say, charts or trend lines or patterns, but then subsequently it will be difficult for you to recap. But with a webcast available at your disposal, you will be able to go over the concept again and again, and then you have lifetime support through email where we will answer all your queries and ensure that you are able to leverage your investment and become a much professional trader. At the end of 2 months, the third month of your webcast, you will be able to have a live session with Dr. Narayan, where he will go over the important concepts of technical analysis. He will tell you how to read a particular chart, how to interpret a chart movement, and ensure that your understanding of the subject goes up much higher. And then there are two support webinars where we show you how the relevant aspects which have been covered as part of the webcast played its part in the market to influence certain movements. So all this is available to you as a part of our CTA webcast. The price of this, the investment which you will be making, is 17,000, but through our support and through our constant interaction, you will be able to generate many times over, because nowhere in India such a detailed discussion and interpretation of technical analysis concepts are available. So you can contact our office next week and get to know more about the CTA webcast. The time window has already started, and you can get access to this unique webcast where you get to know about technical analysis much in detail. Because not technical analysis, mind you, is not only about just opening a chart and just plotting some trend lines and everything. It's about understanding the concept. It's like you trying to do max without even understanding how the numbers work or even how the letters are formed. You need a senior kg, you need a junior kg, then you need a first standard before you come to 10th. But right now everyone wants to start from SSC, and that's where the problem comes, and that's where the losses come, and that's where the non-belief in market comes. However, by undergoing structured learning, your understanding of the market will be much different, your interpretation of technical analysis will be much different, and the confidence with which you will trade will go up much higher. Okay, with that, I'll discuss more about the program in some time and give you details of what are we going to cover. Now we move on to the grades of candlestick chart pattern. Have you ever seen this? Some of you have been doing technical analysis for some time, but this is how a candlestick patterns have to be graded. You have a one candle pattern, you have a two candle pattern, you have a three candle pattern, and each pattern differs in its impact. So the formation of each pattern is also different, and all these are covered as part of the webcast which I just talked to you about. So in one candle pattern you have doji, hammer, hanging man, gravestone doji, dragonfly doji, spinning top, while in the two candle pattern we have bullish engulfing, dark cloud cover, piercing line, tweezer top, harami pattern. And in the three candle pattern you have three black crows, three white soldiers, morning star, evening star, rising three. So this way there are many patterns which are there in candlesticks. But for your understanding, for your immediate understanding and implementation in the market, these are some of the popular candlestick patterns which we have highlighted for you, so that you get an idea of how important candlestick how important role candlestick plays in giving a good lead while taking a trade. I'll give you 2 minutes to just go through each of the candlestick pattern and what does it mean. Meanwhile, if you have any queries, you can have it posted. Okay, let's get going. So you got an idea of what are the various chart patterns which are available. We will be discussing few patterns in the coming slides. The first one which we are discussing is called doji. Doji is a Japanese word and it indicates uncertainty. Like I mentioned, these are war terminologies, and this represents the uncertainty or the confusion which gets created. So there are several types of doji, as one can see from the pictorial representation which I have shown here. There are many kinds of doji, and each doji has its own style of reading. What doji says is that the opening and the closing price have not moved much since the trading session began. As a result, we are seeing that there is hardly any body formation. So one has to conclude that at that point in time, if it's an hourly or it's a daily, like I mentioned, we have to conclude that there is some kind of indecision which is taking place. So What do we do when we are undecided? We tend to take some action, and normally this action is quite aggressive, especially if we are at an endpoint. So a doji at a significant support or at significant resistance can be quite powerful. Doji which happens when there is absence of trend, it doesn't make any sense, or it doesn't have any significance. But when a doji appears at the end of an uptrend or at the end of a downtrend, one should start throwing some air of caution and find out other parameters from technical analysis which indicate that there could be a probable reversal from here. Stating that, this is our first example. This is example of RECL, where you can see there's a first circle which I have drawn. There is a doji emerging here. There's a small body, but still there is high level of debate on whether the sustained downtrend, you can see from here, whether it should continue. And then the prices stop and there is an immediate rally. Same way, you can see here there is another doji formation where the body is negligible, and from here you can see a sharp spiral. So you can see here this is at the end of a decline, and this is the previous lows. This is a daily chart, and from here there's a sharp rise, and there's a reaction, and there's a rally emerging. But doji has already indicated ahead of the news which emerged, and you can see here there is a doji emerging. There are other sets of resistances here. So candlesticks can be seen by itself. However, in technical analysis, we need to adopt other methods along with candlesticks so that your analysis becomes more powerful. This by itself is another form of reversal pattern, which is the dark cloud cover. You can see here there is a doji emerging, and again there is a sharp drop on Friday. So you can see how powerful doji is, and it keeps on appearing. The frequency of doji is much higher, so that's why I have chosen the doji, so that you are able to understand how the chart works. You can see here this is a chart of Infosys. Again, I have drawn these horizontal bands to show you that these were resistances over the last 3 months where the prices reacted into, and they formed a doji as they were not sure about crossing these levels. And then post results, you can see a spectacular jump, and this long candle has been maintained. You can see prices are reacting into it and forming shadows, and this orange sign shown here is again a doji. This doji ensures that the decline comes to rest, and it changes the bias to the bullish side, and from here the sharp run upward. The same way, you can see here that prices are reacting into the previous high which was formed in March, and then there is a doji and the prices crash. So you can see the impact of doji, and you'll have to combine it with relevant chart patterns, sorry, I mean relevant areas of the charts where there are supports and resistances, and if at those places there are dojis appearing, then one should take cognizance of this fact and be ready to act immediately. Is it clear so far? Any queries on Doji? There's another example of Doji, and this is of Nifty. I am zeroing in on Friday. You can see here on Friday there is an uncertain ending to the week. We are due with the Bihar elections tomorrow. There are macro numbers which are coming up next week. So there are a lot of events which are scheduled next week. It's a curtailed week. So one has to see what side the market is going to take. And that's why there is this uncertainty which has developed. So you can see how a single candle captures the entire market sentiment in just 4 data points and in one candle. You can see here this uncertainty. So one should be ready to trade on either side, and on Monday we all know if market begins to trade up, then you can see that the long cessation, there is a cessation of declines. The 2 week decline has come to rest. There are additional supports which are emerging here. People who know other sets of tools can find out. So from here we are able, if the market stabilizes and holds on based on the outcome of the BR elections, then we could see a strong rise emerging from here. This is what is our understanding based on this Doji setup in Nifty. So in this webinar, I have also given you a probable forecast of Nifty, which is quite actively traded now, considering the revision in lot sizes. So these are all value benefits which you get by attending our webinar, where during the course of the webinar, we also discuss with you possibility of the market movement or possibility of a stock which you can encash in the forthcoming week. So how can you really profit from technical analysis? We all want to do technical analysis, but how many of us are really willing to do the hard work? That's why this live webcast will be very useful to you. The CTA webcast which I mentioned to you about, it's a course which is dedicated to technical analysis by the prominent expert who has received the Lifetime Achievement Award in Technical Analysis for his constant effort and constant support and constant sharing. Mind you, Growth Avenues is the only organization that conducts webinar where we provide you value. We do not sell any software. We do not sell any other method of any other person. We try to sell you the concept. We have our own methods which we conduct webinars on, and we are here to, of course, it's a business organization, so we are looking at profits, but we are also looking at giving value addition. So that's why whatever we show you in this webinar can be applied by you in any software. We are not here to malign anyone else, but I can tell you with utmost confidence that whatever is taught at Growth Avenues can be applied on any software, because we are focused on selling you the concept and not the software. So you can see here, this webcast is dedicated to give you complete understanding of technical analysis with focused understanding on important subjects of technical analysis, and give you the idea of how you can read the markets in a much better way, along with giving you the basis for learning technical analysis. We also tell you how to put it all together. So this entire that's why it's called comprehensive technical analysis, because it covers on why you need to know technical analysis to how you should compile the learning of technical analysis and go forward to cover all the important aspects. The session with Dr. Narayan, he will tell you how to read the charts in a much better way, how to use the tools in a much better way. And then in the support webinar, like I mentioned, we will show you how important it is. Like I showed you candlesticks, we will be discussing on other important tools of technical analysis which play an important role in identifying entry or exit opportunities. So what is our course coverage, if one may want to know? So this is an 8-day or 8-session program where we cover introduction on technical analysis. We cover what is Dow theory. Dow theory explained in fair amount of detail. We talk about support resistance, because eventually at the end of the day, support resistance is the main thing, because whatever we do in technical analysis, we eventually ends at support or resistance, isn't it? Then we have candlesticks patterns, traditional patterns. Then you have understanding of line studies, channels, pitchfork. Then detailed coverage on Fibonacci, understanding the mathematical relationship, how you should apply it on the market. Then sir will talk about moving averages, how does it impact, how is it to be read. We all keep hearing about moving averages, but one should know how it works and what impact it has on the price movement. So all that is covered as part of the moving average module. Then oscillators. We all have heard of oscillators, but few of us know how is it constructed, how does it impact the market reading. All this is covered as part of the oscillator module. Then at the end, the eighth module, which will cover the entire design of technical analysis, whatever we have covered, and how to put it all together. Because after you learn so much, you spend so much time, you invest your time, your money, and your effort to understanding technical analysis, one should know how to summarize the entire time, money, and effort into generating probabilities where we will be able to encash. That's what is covered in the analysis framework design. So why is CTA so important? Why do you need? You have courses everywhere. People conduct technical analysis program even in 4 hours. People conduct even in say 6 to 8 hours. But why you need to go with growth avenues for its comprehensive CTA webcast? These are the 4 aspects which are necessary for you to understand. The first one is the man himself, Dr. C.K. Narayan, with his wealth of experience unmatched in today's technical analysis wide. The number of people who are doing technical analysis is soon increasing, but I'm very sure that few of them would have heard of technical analysis. Whoever has heard of technical analysis has learnt under Dr. Narayan, or people who have learned technical analysis with Dr. Narayan are now sharing their knowledge. But this webcast is done by the man himself. Coming to point number 2, it's a structured program. It is not a program which is focused on selling software. It is a program which is telling you how to understand the subject better. So that's what I mean by a structured program. So it is a structured program where you are able to understand how and why you need certain tools, how and why it has to be used. So all this are covered as part of the program. Then point number 3, you get complete clarity on market concepts, you get complete clarity on the tool concepts, and this ensures that you are able to participate in the market without any confusion, because you don't have to look to the other person will look to you for getting a clue on what exactly lies ahead. And the fourth is, it is a structured program which will help you build your foundation for your entire life, your entire trading career. You don't have to worry about it because you would have got a good foundation in technical analysis. Okay, with that, these are the benefits of doing webinars with Growth Avenues. It's a value for money proposition. You have continuous tech support. Our webcast can be viewed on any of the software, or any of the tablet, your desktop. Now we come to our second pattern which we are showcasing. This is the engulfing pattern. Again, it's a war terminology. We all have heard the word engulf, right? Like a fire engulfs a house, or the enemy engulfs, uh, enemy attacks, so they engulf the other opposition. So that's why this word is used, engulfing pattern. Like I said, all candlestick patterns are reversal patterns, and this pattern are of two types. One is a bullish reversal, other is a bearish reversal. So you can see here a bearish engulfing. It's a two candle pattern. Amongst the grade of candlestick, we covered first the one candle pattern. This is a two candle pattern, where you can see here the bearish engulfing. Actually, the second candle is the reference candle. It engulfs the first candle, and it appears at the end of an uptrend. The same way the bullish engulfing appears at the end of a downtrend. This is a bearish candle which is engulfed by a white bullish candle. Green, red, white, black. These are the standard color combinations which are used in candlesticks. So depending on your software capability, you may even be able to change it into a green and red. So these are the two sets of color combination which are used. So now we'll look at some examples. This is an example of bullish engulfing. So you can see here there is a bullish engulfing emerging. This is chart of IRB Infra. Prices have been consolidating at this level for close to month and a half, and here you have a bullish engulfing. A nice long body candle which emerges says that is probably the end of decline, and from here on the prices steadily move higher. So you can see here there has been a good run post this bullish engulfing which we saw. Moving on to next example. This is an example of Voltas. You can see here at the end there is a doji which indicates uncertainty, and now this uncertainty is followed with a bullish engulfing. So you have a bullish engulfing here. For engulfing patterns, we have to consider the body of the candle and not the wick, the shadow. So one can see that there is a doji appearing, the prices are moving sideways, doji appearing, so there is no continue intention to go down, and this bullish engulfing has now taken the prices higher. I hope everyone is getting a fair amount of clarity on how to read an engulfing pattern. Now we move to bearish engulfing pattern. Similarly, this is an example of Bajaj Auto. You can see here that Bajaj Auto is reacting into its previous high. This is a failure. You can see here also there is a bearish engulfing which brought down the prices, and here also there is a bearish engulfing. The first is green, and then this followed by a red body, and here you can see that the prices dropped quite sharply. So this is how you'll have to identify trading into resistance. The resistance is also there, and then there is a bearish engulfing emerging at the resistance, so one should get ready for a reversal. Is it clear so far? Great. Now moving to the next chart. This is a chart of Adani Port. You can see here there is a bearish engulfing emerging, and then it's going down. Here there is a trend line resistance, and again there is a bearish engulfing, and again the prices are going down. And now, as an afterthought for next week, I showed you a doji in Nifty, and now after a strong decline in Adani Port, you are able to see a doji at the end of this decline. So we are looking at some possible reversal patterns emerging in Nifty as well as Adani Port. Yes, with that I come to an end of this webinar. It's been nice having you all as part of this webinar. Like I mentioned earlier, what I showed you is just a fraction of what is there in the webcast. The webcast has got an enormous amount of detail which tells you on how to use technical analysis, how beneficial will it be, and how powerful you can use this subject and ensure that you stay on the right side of the trend. So now I'm open to some questions. I already have a few questions out here, so I'll address them. Meanwhile, anyone has any questions can continue posting.